And the title of his video is How to Invest in Cryptocurrency for Beginners in 2022. The top coins to buy from a guy who's not in the crypto space. So let's check this out here.
Up my channel tremendous, and it gives me a good indication if these are the types of videos you want to see more of. So thank you guys so much for doing that, and with that said, let's begin. First, when it comes to cryptocurrency, with risk comes reward. I'll be the first to say that if you're enamored by stories of huge Wall Street bet-sized gains that offer life-changing amounts of money seemingly overnight, it can happen. But you'll need to be completely fine with the strong likelihood that most likely you're going to lose a significant amount of money in your quest to find the next big thing, hope it pumps, and then pray you sell in time to buy that Lamborghini Aventador or SVJ. In fact, a recent analysis shows us that had you invested an equal amount in the top 200 coins, only 5 of them had a return above 10,000%. Meaning if you're blindly throwing your money into different projects, you only have a 2.5% chance of picking the right one, with the losers severely lowering your returns. In fact, statistically, the ones that drop tend to fall by a lot. And in these cases, you can expect to see a decline of at least 90 to 100% of your entire investment by chasing the one that does well. It's really important to mention this because for every story you hear about someone making millions of dollars, there are likely hundreds of other people who have lost, sold too soon or too late, or don't see anywhere near the types of returns like this. So if you're chasing the biggest returns possible, I'm not going to discourage you from trying to make money. But just understand that the odds are against you, and most likely you're not going to be the next half pizza millionaire. And that brings us to the...
Okay. So overall, yeah, absolutely right. Chasing projects just to make 10,000, 100,000, 200,000 gains is like gambling. 100%, right? It's like trying to pick the lottery or trying to win the lottery, for sure. But here's what I always find funny. That's no different than being in the stock market and playing with penny stocks. There's no difference. Like anything that's highly speculative, where you don't do the research and you don't look at fundamentals, that's always the case, right? Now, if I went and had a bunch of money and I even wanted to do real estate and I didn't look at the location and I didn't do my research about any of the numbers or the data that you need to pick solid properties, I would be in the same situation. So that advice, while it's great, is not specific to crypto. So the thing with crypto, because it's new and it does get hyped to a certain degree, people tend to think it is easy to make money. But that goes with AMC stock, right? All those meme stocks that were happening, definitely during the 2020 to 2021. So great advice, just not overly crypto specific.
Number 2, generally the most stable and predictable returns have come predominantly from Bitcoin and Ethereum. I'm sure most of us have seen articles that sensationalize how much you would have today if you invested $100 in Bitcoin in 2009, which if you're curious is $48 million, or how Ethereum is up 35,000% since its inception. And even though there's a lot of optimism around the future of the top 2, it's also very easy to think, and they've already gone up so much already, I would make more money investing in something smaller. But you know what? You might be wrong. On the surface, it was found that when you compared the first listing price of an exchange with the latest trading price available, only 40% of them gained value. That was it. So right off the bat, if you blindly buy into everything that comes up, expect 60% of them to be losers or break even at the very best.
So here's the thing. Here's where things vary a little bit, or quite a bit, is that depending on where you are in the market cycle, are you in a bull market? Are you in a bear market? That will heavily play out in terms of what is happening on the exchanges. Now, you can point to now and be like, okay, so if he says for beginners in 2022, okay, that to some degree that's fair, but the prices that are actually happening on these exchanges are pretty low right now anyway. We're not getting these projects that are listing 10, 15, 20x plus on these exchanges and then over time falling. I mean, they're all low. To tell you the truth, no projects even want to list right now. No new projects want to list on an exchange right now. They don't do that during a bear market because they understand that the price point for their tokens is already going to be low. Nobody cares. Even if they have good fundamentals, nobody cares. So for beginners in 2022, understand that new projects that are coming up, they're most likely not going to list during this time period. And actually, if they do list, there's a very good chance that those projects have some fundamentals behind them because they're actual builders. Because everyone who wants to do pump and dumps or who wants just the exponential gains, they'd rather do it in a bull market than a bear market. So for someone to list now, very interesting as to why they would do that. So something to think about.
However, even though 40% of cryptocurrencies actually gain any value, as I'm sure you're aware, the ones that do well do really, really well. And the average gain across those winners is a staggering 3,048%. Now, even though that sounds like a ton, and it is, what's even more interesting is how much of that is driven by a few of the outliers who skyrocket past the moon and go to Mars. Because if you remove the top 1% of the cryptocurrencies from that gain, your return drops all the way down to 641%. And if you remove the top 5%, your return drops down to what you would have made investing in the S&P 500. That means of the 40% that actually gain any value, only 2% of that actually pushes your return up higher than that of the stock market long term. And then the other 98% of the time, you would have been better off just being a boring buy and hold S&P 500 stock market investor instead. Although,
yeah, so this is where bias tends to color the content. So Graham here, he's in real estate, but he's also heavily into stocks, and he's also into, from what I remember, index stocks, ETFs, mutual funds, things like that. And there's no way that this new wave, if you're picking the right projects with fundamentals, now there's no guarantee, but if you were to hold for the same amount of time these crypto projects versus the S&P, the index for the S&P, it's not even going to be comparable at all. What I do like that he said was that if you remove Bitcoin and ETH and some of these top gainers, you definitely see a dramatic drop. And I do like that. You know, people chasing just because they think they're going to get gains, I think that is a problem. And no one does the work. So here, if you want to be safe, as he has on the screen here, Bitcoin and ETH is really the way to go. But this whole comparison about the stock market and here and S&P, like since at least 2020, it's not even close of which one's the gainer.
what begins to put this into perspective is that throughout the overall cryptocurrency market and testing different strategies to maximize returns, for almost the last decade, the vast majority of profits year over year are mainly led by Bitcoin and Ethereum. The website costavg.com shows us that just a $50 a week investment in Bitcoin would have yielded a total of 2,180% since 2016, and Ethereum would have brought you 6,683%. Now, that's not to say that those types of returns will continue indefinitely, but so far, year over year, they tend to be the safest and highest risk-adjusted returns in cryptocurrency. So it's probably best just to stick with that. Now, third, study after...
So I like that. And again, this title is for beginners. And anytime any beginner asks me what they should do, I always tell them to stick to Bitcoin and ETH. That's it. Once you start playing with Bitcoin and ETH, then you start to learn more and more, and then you can get into the rest of it. So 100% agree with him. The safest thing to do, and long-term, your best returns long-term could potentially be Bitcoin and ETH as well. And as Bitcoin moves, so the market moves. So as a beginner, the best place to start, I 100% agree, is Bitcoin and ETH.
Your study shows the importance of diamond hands. And no, I'm not talking about my coffee flavor now for sale at bankrollcoffee.com, but instead the practice of buy and hold. Now, unfortunately, this should not be used as an excuse to hold on to a losing cryptocurrency longer than you should, with the expectation that if you just hold on long enough, it'll have to recover. Because it might not. I'm looking at you now. The long-term buy and hold approach of the top cryptocurrencies has done well, even though in the short term you could lose a significant amount of money. As an example, this reminds me of the Reddit user Joe4M, who put this exact strategy to the test and documents it on his website, top10cryptoindexfund.com. And legend has it, he's still documenting his portfolio to this day. Alright, no, he does post a monthly update on there, but if you follow along, it's actually really interesting. 4 years ago, he started by investing $100 each into the top 10 cryptocurrencies on January 1st every year. And by the end of the first year with this experiment, his portfolio lost 85% of its value. Back then, even the almighty Bitcoin fell 70%, and 4 of the top 10 cryptocurrencies were no longer in the top 10 list by the end of the year. But you know what they say, when cryptocurrency goes down, blame it on Congress and then buy more. So he kept his original investment and repeated the process again by buying $100 each into the top 10 coins. Well, 12 months later, during a time where the S&P 500 went up 29%, his cryptocurrency portfolio increased a whopping 1.74%, leading him to underperform a savings account. Although he kept repeating that process year over year, and now that patience has finally paid off. If we now combine all 4 years together, holding everything equally the entire time, we can see that all of them are now up a significant amount, with even the previous 2018 portfolio going from an 85% loss to a 72% gain. He even mentions this having averaged a 514% return compared to the S&P 500's return of 56% during that same time frame. All of that is to say that despite the consistent volatility and severe crashes along the way, historically both Bitcoin and Ethereum have always recovered and the market moves forward. So if you believe in a project and you have the means to stay patient, generally a buy and hold approach is going to be the most profitable, even though in the short term you might lose your short. Speaking of that, with cryptocurrency.
So here's what I like about that. So one is that individual spent $100. So a very small amount. And what's great about the crypto space is that you can make what's called asymmetric bets. So you have you put in a small amount of capital, but the returns can be much greater. So you're not killing your lifestyle if things go to zero or significantly less, but the upside is exponentially higher. So that's one. Two, I like that he continued the strategy irrespective of how it did year to year, and that's a form of what they all call dollar cost average. And what that means is that you have a set schedule, whether it's bi-weekly, weekly, monthly, every 6 months, every year, whatever the schedule is, you have it set, and irrespective of price points, you are going to put in a certain amount. So that could be $100, that could be $500, whatever it is for you that you're comfortable doing. And dollar cost averaging has shown to be the best strategy possible. Again, you got to pick, as Graham mentions, Bitcoin and ETH being quality assets. Now, this individual did the top 10, and that's okay, but many of those top 10s aren't going to be there in the next cycle, the next 4 years or the next 2 years. But you can't go wrong with Bitcoin and ETH. And so I love these concepts of asymmetric bets, dollar cost averaging, and mainly Bitcoin and ETH, which over the long haul are going to give you significant returns.
Only invest what you're willing to lose. I know this is the most cliche investing advice ever, but it's true. Given the uncertainty, volatility, regulation, and manipulation of a large portion of the market, you should not be investing an amount where if you lost it all, you would be ruined.
So here's the funny thing. I talk about manipulation. The stock market is one of the most manipulated markets you'll ever see. So it's funny how it's always thrown at the crypto market that, hey, there's heavy manipulation, but you can't go one day in the stock market without there being manipulation. So I find that interesting. So the regulation portion of it, yeah, I mean, there's a certain portion of that makes sense and that is true. But a lot of times the volatility, it's not because it's regulated or not regulated. I mean, if you look at the stock market, the same time frame of November 2021 to now, that's heavily regulated. And you've got stocks that are down 60, 70, 80, 90%. Massive volatility, but it's regulated. Also, people like to say, well, since it's not regulated, the consumer is not protected. Well, there's a lot of things that happen in the stock market that, it is regulated, and it actually hurts the consumer even more. So I just want to touch on that point.
The truth is, to think logically and make rational, level-headed decisions, you could not let your emotions get the best of you or trade as though you're trying to cure the national debt. The only way to remain completely neutral is to limit your investment to the point where if it drops, it would suck. But you would be perfectly fine and you wouldn't have heart palpitations. From my experience, after speaking with hundreds of people, if you're ever at a point where you're losing sleep, unable to concentrate, or panic at the sight of a 10% drop, That probably means you've invested too much, and it's a good idea to lower your investment to the point where you could think objectively. Honestly, that amount is going to be different for everybody. And hey, you know what? If you're comfortable going 100% all in 3x leverage on Shiba Inu, more power to you. But for the vast majority of people, it's probably a better idea to start out your investments small and grow it over time than invest more than what you're comfortable with and lose your mind if anything happens. Now, on the plus...
100%. I couldn't agree more with that. I mean, we just touched on that on this previous point, that no amount ever feels good to lose, but you have to invest only what the worst case scenario would not, as he said, ruin your sleep, ruin your focus, literally cause health issues, mental and physical. That is for sure. You have to avoid at all costs. The point of being in any investment space is to play the long game. You want to make sure that you're able to be in the investing arena day after day after day. And if you pile your money into any one particular project that you haven't done the work, doesn't have the fundamentals, and is risky, you have a big chance that you blow all that money and now you're out of the game. One, you don't have capital, but two, emotionally and physically, mentally, you've checked out. So definitely agree with him on that point.
Side to all of this, studies actually show that if you want to diversify your portfolio, it doesn't take much to boost your returns. For instance, Fidelity recently considered Bitcoin to be an uncorrelated asset, meaning its price and performance are not directly tied to how well other investments do, like stocks and real estate. For that reason, it was found that just a 5% allocation to Bitcoin would have boosted the cumulative return of a traditional portfolio by 65% since 2014, even despite the sell-offs along the way. So don't think that you have to invest everything into cryptocurrency to get the benefit. Just invest enough where if it goes to zero, you'll still be okay, but still enough where if it goes up, you'll be able to make some profit. Fifth, don't blindly invest.
So here's the thing. If you are a seasoned investor in real estate, if you're a seasoned investor in crypto, into the stock market, they always say that don't put too much into crypto, right? It's a highly volatile market, it's highly speculative, all that kind of stuff. But a lot of these guys who have accumulated massive amounts of wealth, Warren Buffett, you look at Grant Cardone in the real estate space, these guys went all in on their sector. Now, maybe once they reach a certain level, they kind of start to spread out. But they were just more meticulous about what they were doing in their space, and they went deep in their space to learn it. So 100% I agree for a beginner. Get your feet wet, understand that. But this whole narrative of just treat crypto as highly speculative and don't push too much in there, that's really, you're speaking to those who are not willing to do the work. And if you're a beginner, that's fine. I'm not saying you go all in, but I'm saying if you have investments or enough capital and you do the research and want to do crypto 100%, there's enough in there for the long term that you can make significant gains without throwing your money out the window, basically, right? Like just closing your eyes and throwing a dart, that's not going to get it done. But that doesn't get it done in any sector. Those who are heavy in the real estate market don't usually dabble in stock markets. And those who are really hands-on in the stock market aren't dabbling anywhere else, because it does take all of your attention. It does take all of your effort, and to build those emotional scars, you got to get through the emotional scars. And if you're all in a particular sector, you learn much faster. Now, you don't have to be all in with your capital, just as he said in the beginning, but mentally, are you all in the space to learn as much as possible and learn far beyond what the average person does, which means just reading articles or watching YouTube videos? Like, are you putting in the work? And if you are, then in my opinion, it's okay if you're all in, as long as you spread that capital slowly into the space, as opposed to going all in before you know anything about it.
Because everyone believes it'll eventually hit $1. That's just a recipe for a disaster. The reality is, when you're reading or watching advice online, you have no idea if or how that person is compensated, or if they have a bias that might affect their advice. For example, I'll be completely honest that 5 to 6% of my entire portfolio is invested in Bitcoin and Ethereum. That's something that took me years of research to feel comfortable with, and it's up to you to decide if I can speak about that investment objectively, or if I'm only talking about it because I want my investments to go up.
Yeah, that does happen. 100% that happens. But it's the same thing in the stock market. Now, can you move the market if you are a big enough influencer? Yes. Does it happen as much? No. I mean, the stock market is, there's much more capital in there. So for a micro influencer or even, someone with 4 million subscribers, can it move the market? I mean, it depends on the project you're in. If it's a really small company and it just recently went public or something happened, you can definitely move that market. So again, what he's saying is accurate. It's just not necessarily only for the crypto market.
Now, obviously, I think it's pretty evident that nothing I say or do will impact the price of Bitcoin and Ethereum, which is where I'm investing my money. But that's not the case for smaller market cap coins, which could easily be influenced up or down depending on what somebody says. It becomes so easy to fall into an echo chamber of investments where you watch one person saying that rocket emoji coin is going to the moon, and then you get recommended another creator who says that rocket emoji coin is going to the moon. And then all of a sudden, that becomes all you get recommended, and it becomes very difficult to hear opposing viewpoints or anything else that might give you a more well-rounded opinion. So in this case, don't just listen to one person or one source. Do your own research by hearing both the good, the bad, and everything in between. Places like YouTube, Twitter, and Reddit are fantastic resources. But just be aware that every coin is going to have its own community where they believe it's the best thing ever since sliced bread. So do your best to see past that, decide if this is something you want to buy in, and then be prepared to lose all of it. And 6, you gotta take cybersecurity.
So he's right there. A lot of these coins, a lot of these projects grown their community, and the community is very important to any project. And for it to be sustainable over any period of time, you have to have a strong community. And that community really fights for the project. Now, many of them might actually believe in the project itself, which they should. But what happens is a lot of times when you buy into a project, you're more likely to defend that project to anybody else because you made the investment. And by you talking down about the project, you're literally talking down about your decision to invest in it. And no one wants to feel like an idiot. And so when you do that, you're actually defending against your decision to invest in that project. Now, there are definitely certain people who are looking to build a community around a project so that they can leave once it reaches its peak, or they can make enough money, 100%. But like I said, that also happens in the stock market. Many companies out there that are really small, that these influencers can move the market by their following. And if you look at from 2020 to now, while everyone was home, everyone was investing in the stock market. It was crazy. It's not just crypto, stock market. And many channels were built off of the last 2.5 years promoting projects and talking about highly speculative things. And they did very well if they were invested early and then spoke about it. So again, it's not just crypto, it happens everywhere. But he does say do your own research, and that is true across the board.
Security extremely seriously. I'm not going to go into all the ways that someone can take control of your account and transfer your cryptocurrency from one wallet to another with very little recourse, but I will say this. Stronger password protection and two-factor authorization is a must-have regardless of where you keep your coins. And for the ultimate protection, here's what I'd recommend. 1, the least secure is keeping your coins on a brokerage or an exchange. This would include websites like Coinbase, KuCoin, Binance, or anywhere else where you could buy something and then just leave it sitting on your account. Even though most likely you should be fine, brokerages are still prone to attacks. And if you fall victim to a phishing scam, you bet Coinbase has no incentive to help you get that back.
Yeah, I'd go even beyond that. Not even so much a phishing scam or any other kind of hack. It's more what the exchanges can do themselves. The exchanges can decide that, hey, look, we don't want you to be able to withdraw anything. We're going to freeze your account. We're going to suspend your account. So even just from, forget the hacking side of it, just from the exchange owning your assets, that's the worst place to keep your assets.
Not to mention, you never know if a brokerage might go under, get shut down, or flat out deny access to your account.
There you go.
For that reason, if you have a significant amount of money, it's probably a good idea to move it to a private wallet that only you have access to, just in case. But 2, a step up from that would be what's called a hot wallet. This refers to a digital wallet that connects to the internet, so that way it's a lot easier to buy and trade. Just kind of think of this like your own secured bank account, except with cryptocurrency. By having it connected to the internet, it's always there in the event you need access to it. However, the downside here is appears that they could certainly be more prone to an attack. However, they're certainly a lot more convenient to use. Third, if you want the most security, you could look into what's called a cold wallet. This is a way that you can store your cryptocurrency offline. So unless someone has access to your physical hardware wallet and they know your secret passphrase, they can't get access to it. Generally, people tend to use either the Ledger or Trezor. And if you have a lot of money and you want to store it safely, this is probably the best way to do it. Now, sure, the
100%. There's nothing that he said there that I would argue with. Leaving on exchange is the worst thing, or the least safe, both from a hacking standpoint, but also from just control over your assets. And then the step up there is to go to a hot wallet, something like a MetaMask wallet, which is very ETH-centric. There are things like Bitcoin.com wallets that will handle your Bitcoin as well. But anything that's tied to the internet or linked to the internet, you're always open for someone to hack in and access your assets. By far, the best thing is the cold wallet. It's not the most intuitive thing to learn, but once you start doing it a few times, it's very easy. And that's with anything, but definitely in this space, there's always that little bit of barrier in the beginning. But then you start to see that, hey, I can transfer money or transact. I can send it to my friend, my family, whoever it is. And there's no middleman. Nothing stops me from doing that. It doesn't have to happen between, 9 a.m. and 5 p.m. bank times. It doesn't have to wait Monday to Friday. It doesn't have to wait because it's Saturday or Sunday. And then the transaction fees, especially for Bitcoin, are super, super low. So all these things happen the best through a cold wallet, and it's also the safest for a cold wallet.
Convenience is that if you ever want to move it, you have to connect to the internet and then move it to a hot wallet. But for security, nothing else beats this. And fourth, you should never click links in emails or texts. Don't give it.
So he said something here. He said that you got to move it from your cold wallet to your hot wallet. By and large, you can do everything that you need to do directly from the cold wallet now.
Then you want access to your wallets and never reuse the same passwords. I know this all sounds like common sense, but you know the saying, an ounce of prevention is worth a pound of cure, which means it's a lot easier to prevent something from happening than fix it once it does. Just be cautious, write down your recovery phrase and store it somewhere safe, and enable two-factor authorization for an extra layer of security.
So one thing to add here about your recovery phrases, a lot of times what people do is that they will store it on their computers or they'll store it on their phone. And you're literally linked to the internet through that, which means that you're open to being hacked. So if you use, Notes, or if you use, Evernote or something like some kind of application to store your recovery phrases, you're literally, one, giving it to another central party to access it. But two, they can be hacked, which then means that your information can be hacked, which now means someone now has access to your crypto assets. So keep them physical, store them if you can.
And fifth, as far as what I do, I use a combination of everything, and I spread my money throughout as many different places as possible. I also throw some of it on BlockFi.com/Graham, because at least they're paying me interest, whereas otherwise it would be earning nothing. For me, it just helps to compartmentalize different holdings into...
So it's funny, right? Because he mentioned the least secure is a password, is an exchange, but he's on BlockFi, which is essentially an exchange. And BlockFi used to have great rates when they first came out, really to suck people in. And then they significantly reduced those rates going forward. And they've had some issues where they needed some funding to actually make sure they were solvent. And a lot of these platforms, Celsius being one of them, we're lending out the assets that you put there to other people and then kind of arbitraging the yield and then passing some of that on to you. So he mentioned BlockFi. I'm interested to see if maybe this is something that they've sponsored him to some degree or mentioned, he has a link, right? BlockFi/Graham. That's a referral link. So, I don't hate on anybody for doing that, but funny that he mentions that certain people push certain coins, but certain people also push certain platforms because they get that referral link.
To different places so I don't make any impulsive decisions. And if you want up to $250 to free Bitcoin for signing up with BlockFi, feel free to use my link down below in the description. But otherwise, using a combination of everything is probably best so that way you always have something to fall back on. So those are my favorite strategies when it comes to cryptocurrencies that historically have been both safe, stable, and secure.
Yeah, so look, overall, not bad advice. I'm not going to hate on him at all. I love Graham's content, so I want to make that clear. But there's a lot of stuff in there that has to do with someone who's not in the space, you know, spreading things out too thin. I mean, spreading things out over your hot wallets, you can actually have different accounts in your hot wallets. 100%, that's a good thing to do. So if you are connecting to NFT projects, you don't want your main wallet to do that just in case there's some issues there. You kind of create a separate one that's only going to interact for that NFT project. So there's a lot of different things you can do within your hot wallet, which Graham didn't mention, but he's right about spreading things around just so that you're not tied into one particular type of wallet when it comes to crypto, right? So 100% he's right there. He's also extremely correct in terms of Bitcoin and ETH are really the market movers. Those are my favorite, especially now in the down market. Those are the ones that I generally like to jump into. Now I've been in the market since 2020, so there are certain projects that that I favor based on the fundamentals and the research that I've done. So I feel comfortable being in this down market to actually buy them now because they've been hit so hard. And honestly, even when it comes to any market, this is when the wealth is made, is in the down market, because quality projects are at such a discount. If you know how to spot them, if you know how to do the work to find them and monitor them and stay with them, this is where you accumulate. And then when the next bull run comes, you're laughing. So I wanted to share that. That was fun. I didn't see that video at all before we did this video. So, for more tips about hot wallets and cold wallets and what the difference is and which ones you should have, definitely go check out this video right here.